talk to us about how this plan will work.
Well, we announced a few things we're really excited about this morning. We want to double our development velocity. That will allow us to ship new features and realize our other goals, which are 315 million or more MDAU by the end of 2023. And as you mentioned, doubling or more our revenue to $7.5 billion in 2023. We're moving faster. We're innovating in great ways. And we have the confidence to put long-term goals out there and to invest to realize them.
Super follows, I should say. How much money do you think this could generate, and what's the reaction been so far?
Well, we're really excited to talk about super follows. One of the reasons is this is an example of a subscription that may benefit the content creator in terms of putting money in their pockets as opposed to putting money in ours. We want to facilitate transactions that help people put their best content on Twitter with their follower graph, with people finding all that incredible content to add to what's already on Twitter today. We'll also work on other subscriptions as well, which would be areas where we might provide a premium service to a consumer or to a business that they'd pay more for today than the way they already use the service. So there are lots of opportunities for us around subscriptions to help people.
So look, you want to add 120 million users over the next 3 years. What makes you think you can do that if you've gotten to 190 million in 15?
Well, we added 40 million MDAU over the course of last year, and we had more people who came to Twitter and became a daily active user because of product improvements than we've ever had before. The top of funnel, the number of people who come to Twitter every day that haven't been on it for a month or more, who have never used the service before, has been really consistent at about 2 million. So we have lots of opportunities, and we're doing a better and better job of helping people find what they're looking for once they come. Kayvon today, our head of consumer product, he shared that we grew our MDAU 84% year over year in India, just as an example of where we're seeing explosive growth and lots of opportunity to get to 315 million or more in 2023, and hopefully far beyond that over time.
Your Clubhouse competitor Spaces is live. I've been checking it out. What is the opportunity that you see there?
Well, this to us is just a natural extension of serving the public conversation. Text, images, video, audio tweets, and audio chat rooms. When you can find the topics that might be most interesting to you, join a conversation or listen to one, when you can tweet alongside them, or when you as a content creator, Emily, can create a room and talk about one of the topics of the day around Silicon Valley on our service, we feel like we're really extending the way that we can serve the public conversation. It's in beta today, but we hope to roll it out more broadly soon. We're really excited about it.
So are you concerned, though, that you might miss the wave that Clubhouse is now riding and it'll be too late? They will have defined or taken that category.
I think we're talking about a way that people communicate and not a particular service. People want to be a part of a conversation. Sometimes they don't know all the people who know about or are interested in the topic that they care about. One of the things that Twitter's really great at is helping people find those people, find the topics, find the details around the topics that they care about most. And so this feels like a real natural extension to the way we already serve the public conversation. I don't think this is a moment in time. I think this is a great way that we can leverage what we already have on Twitter to do an even better job of it.
So, look, Jack Dorsey has been called to testify again on Capitol Hill in March. There are a lot of issues percolating, still folks who believe you shouldn't have banned the president permanently. I know last time we talked, you said there's no path back for Trump to Twitter. Bill Gates just told us he thinks that's the wrong call. I know everybody has an opinion. But are you at all reevaluating that decision or future decisions of that nature?
I think we've covered that one, Emily. But one of the things that's great is whether it's Bill Gates having an opinion about our policies or others, they come to Twitter to be a part of that conversation. And whether the topic is our policies or our products or even our analyst day, people are able to find other people who want to talk about it and hear from them on Twitter. We hope that the conversation, recognizing that lots of people come at these things from different angles around our policies is constructive, and that people listen to each other. And we're always eager to learn and observe what the world says about the way that we run the company. You probably noticed, Emily, that in the recent past, when we do update a policy, we often put it out for comment first so that we can hear from and learn from people who use the service before we complete the policy work.
Now, looking ahead, we've been following Snap hitting a $100 billion market cap, which is fascinating given they considered selling to Facebook for $3 billion. Obviously, TikTok is out there. How much do you think these other services are a threat, given that they cater to a younger user, and that could be the next generation of Twitter?
We just think about helping people find what's happening in the world and what people are talking about. There are terrific apps on our phones to use for other use cases. Sometimes they overlap a little bit with what we do. Oftentimes, there are people who you can find on other services. But when you want to know what's happening in the moment, whether it's around sports or entertainment, the launch of a new product from a company that you're a big fan of, Twitter is a great place to see and be a part of that conversation. And that's something that's pretty unique to us. And as we become better and better at helping people find those conversations and feel safe being a part of them, you're seeing it show up in our results.
We saw a huge tech sell-off today, though Twitter defied gravity, ending the day up, almost 4%. We've talked a lot about the possibility that we're in a tech bubble, that bubble could be close to popping. What's your position on that?
Well, I'm much better at assessing what's going on at Twitter than I am thinking more broadly about stocks, or maybe I'd be in a different role. But when we look at Twitter, we've never felt more confident about our strategy, about our team, about our execution. And on the heels of those things and our thinking around them, we are doubling down and investing more in 21 than we did in 20. We're going to grow headcount more than 20%. We're going to grow expenses 25% or more. We said that we expect revenue to grow faster than that. We've got a posture of investment because of our confidence. And so we'll have to see how it plays out in the broader economy. But with these two really big market opportunities, that is billions of people who still don't use Twitter and over $150 billion of digital ads that isn't spent on Twitter every year, we feel like there's still lots of opportunity for us to continue to invest to drive growth.
And how should investors assess the potential regulatory headwinds, given increased scrutiny in Washington, not just on Twitter, but on big tech in general?
Well, we live in an incredibly dynamic time. And I suspect that the conversations around privacy, around how companies choose what does and doesn't happen on their service around Section 230 here in the United States, these conversations will go on for many years. And we feel like we have a really important role in these conversations in speaking for millions of websites who have reviews of products, who have chat rooms, who have public conversation on them, where today the companies aren't held to account by government for what somebody might say on their service, but we are held to account by our shareholders, by our employees, by the other people who use these services. And we want people to think about transparency and choice as a way to solve the concerns that the world has around these things. And we worry that regulation may end up benefiting the very largest companies, but not the millions of other companies who would face the same regulations.